This Tesla stock news is gathering a lot of attention today. According to Glass Lewis, which is a proxy voting firm, they say that Tesla shareholders should vote no on Elon Musk's $56 billion pay package. Glass Lewis said the deal is, quote, excessive and cited the dilutive impact on current shareholders. Investors first approved the pay deal back in 2018. But fellow proxy advisory firm Institutional Shareholder Services has not weighed in on Elon Musk's pay deal or reincorporating in Texas. Back in 2018, ISS recommended voting no on the pay deal. And of course, Glass Lewis can say whatever they want because they do not have a financial interest in Tesla. If Elon Musk's comp package is shut down, there is nothing stopping Elon Musk from leaving Tesla. In fact, he probably should leave Tesla if his comp package is rejected. In a capitalistic society, you do not work for free. You do not provide value for people and do it for free. Now, I don't know if Elon Musk would leave Tesla, but on a principle basis, I would have to support that. If you're not going to pay the guy for 6 years, he should not be there morally and ethically. Now, that would obviously be bad news for Tesla stock, and you guys would not like to hear that. I'm sure you're yelling at your phone or TV as I say that because, oh boy, that would be terrible news. The good news is I don't think the pay package will be rejected. And here's why. Sawyer Merritt wrote this post on X. I'd like to provide a little context that Reuters left out, as the headline is everywhere. And that is, again, the proxy firm Glass Lewis advises shareholders to reject Elon Musk's $56 billion pay package. In 2018, when the original vote for Elon Musk's performance-based compensation package took place, institutional investors held about 70% of all Tesla stock. At that time as well, Glass Lewis recommended that institutional investors vote against Elon's compensation package. Despite this recommendation, 73% of all Tesla shareholders approved the package. Fast forward to today in 2024, and institutional investors now hold about 46% of all Tesla stock, a big percentage decrease from 2018. This change is largely due to an increase in retail investors, who now hold roughly 40% of all Tesla stock. Many institutional investors voted yes for Elon's compensation package in 2018, despite Glass Lewis's recommendation. I believe many institutional investors will vote yes this time as well. With that said, make sure to vote your Tesla stock. And really, just to put this in a simpler explanation, if Elon's comp package is rejected, Tesla stock could fall about 25%, maybe more, probably more, because Elon Musk gives Tesla a premium. And if there's a risk that some of Tesla's tech will leave Tesla, then you almost have to value Tesla as an auto company and maybe a company that makes megapacks. Elon has claimed that even if he left Tesla, Optimus would probably be the segment of Tesla that would be affected most, that Tesla would still be able to follow through with full self-driving, even if Elon was no longer there, but I don't think the markets would fall for that. So why is this important? Well, any institutional investor in the world knows if they own Tesla stock and Elon's comp package does not get approved, the stock is going to fall big time. If you're an investor in Tesla, you don't want to see that happen. And I think it's more obvious than ever, if you don't pay Elon, well, there's going to be consequences. And those consequences will be bad for your money. If you're able to vote in this shareholder meeting, then you have a financial interest at stake. So I personally believe it's going to be an overwhelmingly positive, and that will be great news for Tesla stock coming on June 13th. But the other aspect of this that I don't think is talked about nearly enough is once you get Elon's prior comp package reinstated, then you can get a new comp package with higher tiers and higher thresholds to meet, which says, hey, Elon's not going to get paid again unless you get paid. And I also think the markets are going to like to hear a $5 trillion or $10 trillion market cap goal. Let's be honest, it's probably going to be like a $1.5 trillion market cap, a $2 trillion market cap, a $3 trillion, and a $5 trillion. But still, the markets would love to get some kind of comp package that's along those lines. That also means you probably get a much different Elon and the Tesla team. You'll probably get an Elon that is a lot more focused on the stock price, in which he has not been focused on Tesla's stock price in recent years. And of course, that's because he's working for free and there is no financial incentive to make Tesla stock do well. Essentially, the only reason Elon would want Tesla to do well is really just bragging rights at this point. Even with his prior stock options, well, they're not worth anything anymore because the judge shot down the comp package. So long story short, this needs to be approved. And let me know what you guys think down below in the comment section. In other big news today, Tesla's FSD supervised V12.4 is now rolling out to Tesla employees in North America. Version 12.4 finally removes the steering wheel nag under certain conditions. With past releases, the general public got the new update a few days after employees got it. So we'll see. According to local news, the Beijing Crab Island Tesla delivery center in China reported the highest delivery volume for the day today. And this delivery center is literally packed. I do not see a single open spot to put another Tesla. And that kind of activity is happening even though rates are unaffordable. Just imagine what happens when rates globally start to fall. We're talking better deliveries, better margins, better profitability, and so much more. It's actually outright impressive how well Tesla has done considering the interest rate environment and just how bad off the consumer is. I mean, go talk to people. Go talk to people that work a 9-to-5 job that are trying to survive. Nobody's doing well. At least I can speak domestically in the US. I think sometimes it's easy for investors, retail and institutional investors, to get caught up in what we have been dealing with, what has already happened, and be more backwards looking than forward looking. If we take a forward looking approach, things are going to get better from here, not worse. Question is timing. When does that happen? Does that start to get better this year? Is it next year? Is it 2026? We just don't know. What I do know definitively is you want a strong economy, you want inflation falling, and you want the Fed able to cut rates. If all three of those things happen, the rest of this year, 2025, is going to be a great time for Tesla stocks, specifically 2025. Gary Black wrote this post on X, and I think it falls perfectly into what I just said. He writes, Tesla's EPS estimates continue to fall due to the constant price cuts. Tesla's full year 2024 EPS estimates have dropped 35% year to date. Okay, almost in half. That's insane. From $3.83 to $2.48. Tesla's full year 2030 EPS estimates have dropped 36% year to date, from $17.40 to $11.08. Full year 2024 deliveries are now falling to negative 8.5% year over year in Q1. I expect negative 10% year over year in Q2. Year to date, through April, Chinese-based automakers have sold some 1.6 million BEVs, up 9% year over year. If Tesla's volumes were responding to the price cuts, we'd all be cheering. Obviously, that's not the case. There's really two important things to note here. Number one is if you're buying Tesla stock today, you're buying this stock as estimates have fallen a lot. So that means there's more room for estimates to rise as the environment gets better. And number two, I think Gary Black is making a gross comparison to cutting prices and what Tesla has recently started to do, and that is buying down the interest rate. Yes, Tesla buying down the interest rate still is kind of like cutting prices, but based on what I can see, buying down the interest rate has generated more demand for Tesla. in a way that price cuts never did. And of course, I don't have insight into Tesla's day-by-day delivery inquiries or just, inquiries in general. But if you look at Google Trends data, which is the best indication that we can use as retail or even institutional investors to judge Tesla's demand, I mean, the Cybertruck's going crazy. It's just absolutely insane. But you have the Model Y that Tesla recently started to do the buy down of the interest rate. Then went from, the start of 2024, which was about 22 on Google Trends. It hit as low as 18. Now it's at 38, and it recently hit as high as 44. This was all due to Tesla starting to buy down the interest rate and offer the 1% financing on the Model Y. This also had a positive impact to the Model 3 as well, which did as well hit a low of 18 and is still sitting at 22 today, but did hit a high recently of 32. The Model S and the Model X, they don't really see a lot of activity in general, but they're just staying around trend. Now, the Cybertruck, on the other hand, is sitting at 93. Almost a new all-time high for search trend activity. The all-time high you've seen was when the Cybertruck hit 100, and that was because a lot of investors were going out searching about the Cybertruck. So I don't like to even look at that too much because it's just investors. But this it looks like a mountain or a meme stock, just basically straight up. Now at 93, that is a lot of organic search trend activity, meaning that people are starting to see the Cybertruck out on the road. They're starting to see, celebrities like a Kim Kardashian post about the Cybertruck, and they're starting to look into it for themselves. And mark my words, it's only a matter of time before you see a broader halo effect. I mean, even think about this logically. Forget a halo effect. Think about this from a market standpoint. Tesla is like the only company and the only product that can have something garner so much activity that we can actually see in the data. We all speculated the Cybertruck was going to generate a halo effect, and there was going to be a lot of people talking about it and posting about it, blah, blah, blah. We all speculated that, but it's actually happening, and nobody's talking about it. Literally nobody. It's like nobody's paying attention to what's happening right in front of them. It's like it's just hiding in plain sight because it's literally right here. But good news for you, if you are a viewer of this channel, you will not be left out. And eventually, when the markets catch on to how big of a success the Cybertruck is going to be and the start of a halo effect that could start any time, probably is starting now, well, you're going to have a heads up on that long before big money does. In fact, the Cybertruck is now the most searched about Tesla product in the last 12 months. Just for context, over the last 12 months, the best selling car globally was the Model Y. So the Cybertruck now has more search trend activity, search trend interest on Google than the Model Y, the world's top selling car last year. When EPS estimates fall, stocks fall. The number one biggest driver to a stock is earnings estimates going higher. Now, when you fall in 35% year to date on your EPS estimates, when you fall in 36% year to date for your 2030 estimates, you've lowered the bar a lot. And as things do start to improve, as we get closer to the first cut from the Fed, as Tesla continues to work towards becoming as profitable as possible, and likely right now seeing deliveries actually accelerating, well, that's a great time to be buying Tesla stock because it means earnings estimates can start to go higher again. And Tesla's multiple has remained relatively stable. You started the year at about $265 per share. So if you do get earnings estimates for this year starting to rise, really, it's going to be more important for next year. Well, you're going to be looking at the high 200s, 300s, probably by the end of this year. Over on StockTwits, currently sentiment for Tesla is neutral at 51. Yesterday it was neutral at 53. Message volume today is low at 33. Yesterday it was low at 39. The participation ratio today is high again at 56. Google Trends data for full self-driving is at 23, which is a lot higher, like more than double where you used to trend for full self-driving on Google Trends. Elon confirmed the new take rate for FSD via the full self-driving trial is better than 2% as some people speculated. He said much better. He basically said bitch please as respectfully as he could on X. It's probably closer to 5, 6, 7, 8, 9, 10%, something along those lines, bringing a total take rate to maybe around 20%, maybe around 15% or so. If we get actual clarity or confirmation of that on Tesla's earnings, that could be something big to be watching for around Tesla's next earnings, which is June 20th or so. We don't have the date actually confirmed, but it tends to be in the 20s, 21, 20, 22, 23, 24, 25 of obviously June, the month after the quarter ends. So you're going to have a catalyst on June 13th with Tesla shareholder meeting, and then you're going to have another catalyst when Tesla reports earnings about a week and a half later. It's going to be a very exciting month of June, and I'm expecting we will have good news for both of these catalysts. As I previously reported in other videos, we did see a lot of unusual option activity that was very bullish and very short-term in nature. Options expiring within the next couple of weeks, and that led me to believe that maybe we get some good news soon for Tesla, and maybe some big money investors know something that we don't, and they are positioning for that right now. Tesla also has a massive short interest. About 4% of the float is currently sold short, $19 billion worth of short positions, with 107.69 million shares sold short. Inevitably, some shorts are going to start covering on short positions, especially as earnings estimates start to rise and the outlook starts to get better for Tesla. And that's going to be even more buying pressure, not to mention all the retail investors that are bearish, all the big money investors that are bearish, or even that bought Tesla and sold out in 2024. A lot of those guys are also going to be piling back in at some point this year, in my personal opinion. The percent of stocks above their 50-day moving average on Friday was up about 3%, so about 3% of all stocks out there on the markets broke above their 50-day moving average, which is a pretty dang strong day, and really Friday was kind of a broad-based rally across the board. Tesla stock was up 3%, a lot of small caps, interest rate sensitive names, the Dow, S&P, NASDAQ, everything kind of did well, so we'll see if that continues into a new week. Global inventory numbers for the Model Y are falling sharply now to about 5,400, which is down a lot from the high at almost 10,000, which would suggest more deliveries, potentially more inventory rundown of the Model Y, which is good news. Model 3 inventories are rising to about 3,400, and this is good because you had very low inventories for a long time for the Model 3, and that was because production was really slow in Fremont, and I think we're seeing a lot of good demand for the Model 3 in the US that might be switching over to the Model Y as Tesla has now introduced this 1% financing rate, at least for even the next couple of days throughout the month of May. So we'll see what happens with Model 3 demand, but I still think the refreshed Model 3 is seeing a lot of good demand in the US, and inventory numbers rising suggest to me that production is rising. The Model X and the Model S are staying relatively unchanged. Model X at about 2,600 vehicles in inventory and the Model S at about 1,600. Tesla continues to run about 4,000 different ads with Google. On a technical basis, we do have resistance coming in around 180 to 181. We pretty much closed at the high of the day on Friday, so that was great. We didn't even test that resistance, so I'm sure we're going to in this upcoming week. And then you have your 100-day moving average at 185.08, so $185 per share, we'll just call it that. And then 188, and then 200, and then 213. I will get very excited about Tesla if we get above 213. And I think that can happen in the month of June. I think that happens with the reinstatement of Elon's comp package and the thought process of we're going to get a new comp package with higher thresholds and higher tiers to meet. And then number 2 is Tesla's upcoming earnings. I think margins are likely to get better or at least stay stable, and I think deliveries are going to give you an upside surprise, which I guess that means we'll have a big catalyst for Tesla coming roughly let's say next Monday or so, not this upcoming Monday because obviously markets are closed tomorrow, but the following week. So almost a week from today, we should be getting Tesla's Q2 delivery number, which current estimates are around 430,000 deliveries. I think you can come in a little bit higher than that, and some estimates are as low as 410,000 deliveries. I think Wall Street as a consensus is closer to about 410,000, and I even think 430 would be seen as a really good number. But then again, it wouldn't surprise me if Tesla actually came in with 450,000 or more deliveries. And I should also mention, you have really started a new trend of hitting higher lows, right? You rallied off of that 138 level, you came up, and then you rallied again 15% here. You came down to the 167 level, but what just happened? At least so far, you're hitting higher lows every time, right? You come up, right? Come down, higher low. You come up, you come down, higher low. If you come up, come down again, you're likely going to stay above 173, which would continue to hold this trend of the stock hitting higher lows, which is very bullish. You just don't want to break under 173 or so. And as long as that doesn't happen, the chart looks pretty bullish for a larger breakout. But ladies and gentlemen, that is going to go ahead and conclude this video. Hit that like button and subscribe to the channel. Let me know what you think about this information down below in the comment section. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. I do plan on making quite a few Tesla trades because I believe the next couple of months are going to be very fruitful for Tesla stock investors. You guys have a fantastic rest of your day. Happy Memorial Day weekend. Let me know what you are doing for your weekends down below. Let me live vicariously through you. Enjoy your day, and I will see you in the next one.